Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 13th of March 2026. First chart is the US Dollar Index Futures. They've closed higher over the last couple of weeks on an increase in volume. You can see the market tested for supply down here and then accelerated higher and up to the next level. There was some supply drawn out, which caused a close that was closer to mid-bar than it was to its high. And following a test for supply this week, the market has accelerated higher again and pretty much up to the highs of the range. This is a pretty strong move. Price has moved above all of this trading now. There may be some testing for supply through here prior to any attempt to push higher. I don't expect this level is going to cause any great deal of difficulty, perhaps some when it's initially challenged, but possibly not much. So I do expect there'll be some sideways trading in here to consolidate in this level. But this market's strong here at this point in time, and with the events that are occurring around the world, there's an influx of capital into the US, and that's what's causing this price rise to a large degree, I expect. You can see that in the very high volumes that have traded over the last 2 weeks. So look for some consolidation, at least early in the week, and then we'll see how the market trades depending on how much supply is drawn out. I don't expect it's going to be a great deal, at least in the near term. This push higher has put many of the associated markets under pressure, which you'll see as we move on. That always occurs when the US dollar is strong. This is the next chart. This is the E-mini S&P 500 index futures. I've been saying for some time now, the market's been moving sideways for a long time through here. And if any supply was drawn out, it was unlikely to be able to absorb that supply very easily, and the market would find some difficulty. And that's what's pretty much happened here over the last 2 weeks at least. Price has moved down and threatened to break down 2 weeks ago and has pretty much confirmed a breakdown this week, and it's settled at this level here, which is a logical level. It's the highs here and the lows here, which is what you would expect. The market's trading at a stronger level, and there'll be an attempt to support the market through here, I expect. Whether it's going to be successful or not, we'll just have to wait and see. There's a couple of minor levels below that before this level here, which is the next lower, stronger level. So I expect there's going to be an attempt to support the market around this level here. Whether it's successful or not, we'll just have to wait and see and read it as the trading occurs. This market's been quite reactive to the events overseas at the moment, which you would expect. And that makes it a little less easy to read at times because the market itself is only responding to events and it's not really trading on its own fundamentals to such a large degree as it would normally. Next chart is the US Treasury 10-year note futures, and they did trade up to the highs of the range but failed pretty badly and came back all the way down to the lows of the range on high volume. There was a modest attempt to support the market here, which appears to have failed again. The market's threatening the lows of the range. You've got last gasp lows coming through here, next lower level down here. I expect the market may attempt to recover, eventually fail, and come down and test this level for strength. But that might be over a week or two. I don't expect it'll all happen in one day or anything like that, but with the size of the spreads we've seen over the last couple of weeks, it could do so. All these markets are reacting to both the events overseas, but also the capital flows which are changing around the world, and you'll see that in many of the charts to come. Copper price futures. Copper price futures are under a little bit of pressure due to the strength in the US dollar. It's unsurprising. You can see the market moved up to this level pretty comfortably, but it's really struggled to break above the highs of the range here, which are this bar's high and this widespread down bar, its high. The market is fairly comfortably trading sideways through here. It doesn't look like it's going to threaten to break down at this point in time. We've had 2 down bars in a row, but the thrust is only modest, and the market's holding on to the previous bar's low. So that's showing you there is an attempt to defend against supply. And you can also see that the last 4 weeks' volumes are below the average. So the selling pressure is not overwhelming in this market, and that's allowing this market to make a reasonable attempt to defend against supply. If the US dollar does move into consolidation mode, at least for a period next week, you'll probably see this market attempt to push higher. I don't think it's going to break out, but it may just recover a little bit. And then depending on how the US dollar trades, this market will probably trade the inverse to some degree. Gold price futures haven't quite looked as strong over the last couple of weeks, possibly due to the US dollar being a little stronger, there's no doubt. But this push higher was on relatively low volume, so there wasn't a huge amount of demand for a push higher. The market did attempt to move higher, but then failed and moved lower. Held on to this level, the highs of the range here initially, and this week it's just drifted lower on reduced volume, below average volume, but it did trade within the range of the previous bar this week as an inside bar. So it's not looking particularly weak. It's looking like it's attempting to consolidate through here and absorb the supply as it's drawn out. So it's defending against supply. It's making a good job of it at this point in time. We'll just have to watch how that continues next week. If the supply becomes overwhelming, you've got the lows of this bar, and that breakout line there is where price will possibly come back to, but it would really need to be overwhelming supply, because this market is really attempting to consolidate and absorb the supply right up here, and it's doing a pretty good job so far. Silver price futures. Silver price futures are doing a very similar thing to gold, but in a more volatile manner. You can see the push higher here, similar to gold, was on well below average volume. So there wasn't a huge amount of demand in the market there. It wasn't able to be sustained. Price attempted to push higher on the next bar, but then pushed lower. You can see that trading hasn't come back to this level at this point. So this market's also attempting to find support and defending against supply above this lows of the range level. It's doing a pretty good job. This week's bar was also an inside bar, so there was an attempt to consolidate and absorb supply. And the low volume does show you that supply wasn't overwhelming and the market was able to absorb supply here. So you may find this market is going to be successful at consolidating, and probably gold as well under these circumstances, at least in the near term. And that opens the door for an attempt to push higher when trading conditions allow. Light crude price futures are responding to the events of overseas markets with a lot of vigour, and you can see these very wide spreads. There was some supply drawn out this week as price pushed above the June 2022 highs, and price closed back at that level by the end of the week. Volumes were very high, well above the average, excessive. And generally when volumes are excessive, you'll see a lot of selling pressure in the market. Not always, but often, which means you may see some consolidation at this level, at least initially next week, in response to the supply being drawn out. You can see that supply was drawn out. The market's pulled back considerably from its highs and closed at a logical level. So I expect a period of consolidation in here and then a response, depending on how the fundamentals are going, obviously, but then a response depending on how much supply is drawn out. Into the currencies now. This is the euro-US dollar currency pair, and price is threatening to break down now. You can see over the last couple of weeks, price has pushed lower on increased volume. The market's under pressure due to the strength in the US dollar to a large degree, and price is threatening to break down. The next logical level is down here. But before that, you may see an attempt to recover, which will likely fail, and then price will continue lower. And that would be the inverse of what the US dollar does, and the US dollar does pull back a little to consolidate and then attempt to thrust higher again. So that's what I would be expecting, at least in the near term, in this market, a modest attempt to recover, but a failure to do so, and then a pullback and further breakdown. British pound currency futures, and they're not quite as weak as the euro at this point in time. Price is attempting to hold on at this level. It's probably not going to do so. You've got the lows of the range through there. These are older lines here, which the market's still kind of been respecting. There may be an attempt to recover in a similar fashion to the euro when the US dollar probably attempts to consolidate before moving again early next week. And then it's likely the US dollar will attempt to push higher again. That'll cause this market to fail and push back down to this level. Japanese yen currency futures, and they're really looking like they're going to break down as well. And there's not really a great deal of obvious levels below here to trade to. So we'll just leave it hanging at the moment. When markets hang like this at a level that there's no obvious place for it to go, at least in the near term, you'll often see an attempt to recover, which will fail, and price will move lower. That's what the previous two charts suggest, and that's probably what's going to happen here as well. This does look like the market will likely break down. It is only an attempt to break down at this point in time, but it's looking like it will do so. More likely than less likely anyway. Aussie dollar currency futures, which have been so strong lately, have also found itself under pressure with the strength in the US dollar. The market's still acting relatively strong, especially compared to the previous three charts we've seen. But you can see the strength of the US dollar has certainly dulled this market's performance. Volumes have been very high over the last couple of weeks. But it's good to see the market here has held on to this bar's low, and the market didn't really threaten it this week. I expect if the US dollar continues to be strong, this is the level the Aussie dollar will move to. But you may see an attempt to recover early next week if the US dollar does consolidate, and then price may just come back to this level initially and try to hold on, because this market does have an underlying strength to it at the moment. I'm not sure it can hold on to this level in the near term. It may establish a intermediate level in here and try to hold on to that, at least in the near term. If the weakness is really severe, this is the obvious level price will move to. And if the US dollar does spend further time consolidating, this level becomes more important. So we've got three levels to watch out here. They're all pretty close together. We can see the zone that the market is probably likely to trade in over the next little period. Bitcoin futures. Bitcoin futures continue to trade sideways in an attempt to consolidate inside of this box that I put there over a month ago. And it continues to trade exactly in that range. You can see the previous level where the market attempted to consolidate, which failed dismally with a intentional gap lower here, trapping people up in here. The market has then traded back to this level. You can see the close well off that week's low, suggesting that there was buying support emerge, and prices traded sideways in consolidation mode ever since. There's no attempt to push higher here, at least not in the near term. This market is absorbing supply and trying to consolidate and not break down any further. And that's what you're going to see this market doing for a little period of time. There's likely to be resistance above. Selling pressure will emerge if the price does attempt to move above this level, possibly this level. So you'll see this market just consolidating sideways in the near term, attempting to absorb supply and trying not to break down any further or reduce that chance. You can see 2 weeks ago, this up bar did attempt to move higher and it did draw out supply. The market pulled back in response and it spent a little bit further time in consolidation mode. It was able to close a little higher this week than the previous week, but I still think that there's likely to be more to go in this zone here for a little while. And the time will become more obvious when volumes reduce on the down bars through here. So you can see on this bar in particular here, this volume, that's showing you that supply was low. That's why the market did attempt to push higher, but it drew out supply again as it did so. So you'll probably find this market will pull back again, and we'll see how much supply is drawn out this time when the market tests these lows for strength. Okay, just back to the US dollar index futures quickly before we wrap up. I do think that the market may consolidate a little back here or in this zone early next week, and then it will respond depending on how much supply is drawn out and what events are taking place across the world which are causing this response. And should events escalate overseas, you'll probably find further influx of capital into the US, and that may cause this market to break out. But look for the consolidation early unless something really serious occurs over the weekend, which may change the analysis to some degree. Okay, thanks for your time. Should be back again next week. See ya.